Yo, what is going on, everybody, and welcome back to another video. Today, guys, we're going to be taking a look at Bitcoin on the 1 hour chart, and I'm going to be showing you guys how I made $1,260, give or take, here on this Bitcoin sell. I'm going to go over exactly why I took the sell, where I closed, where I opened, and all that good stuff, so that way y'all can understand exactly my thought process and how you can replicate this same system. Okay, so when we take a look at Bitcoin, we were trading up into this area at around $90,400 at 9 a.m. Okay, and when I was looking at this, I was looking at Bitcoin on the daily time frame. Okay, and the first thing I thought to myself was, okay, we're coming up into 90,400, which is a retest of the prior breakdown level where Bitcoin traded down below support, broke through support, closed below support. We're retesting that level. And so I thought it was a good opportunity for me to start looking for shorts. Now, what was it that actually got me involved in the short? I'm going to tell you right here. It was this candle right here at 9:30 a.m. When this 9:30 a.m. candle closed, a very weak bullish candle inside of the previous bullish candle that had a very large wick at the top, I immediately went in. I got in at 90,000, was 198. So it was almost, this is one of those things where it's kind of intuition, okay? So I saw this candle, it closed, this 945 candle closed here. Boom, it closed at 90,224. When we wicked up, couldn't break this high, and then started breaking below this candle's low here. That is when I entered, as you can see, at 90,200. We started breaking below this candle's low, and I entered 1.25 lots. And the reason was because I knew that this was an area where we had previously rejected, as you can see, once, twice, three times, right? This was going to be the fourth rejection here. And we also had this clean run of candles to the left-hand side, where if we were going to break below this area of support, I thought that we could trade down and fill these wicks. These became wick fill opportunities once we broke this area of support. Okay, so as soon as we broke this area of support, I didn't close immediately. I waited until we got a proper push down on the next candle, and then I closed at about 89,400, give or take. Once we started closing or started trading into this wick area, I didn't know if we were going to continue to reject here, obviously, because we rejected three times, or if we were going to come and fill the entire range lower. Even though I believe we were going to fill the range lower, I didn't want to take the chance on price, getting into here and bouncing and coming back up. So what did I do? In an effort to secure profits, once we got into this $89,430 area, I closed 90% and I moved my stop loss above the previous 15-minute candle's high. Okay, so we traded all the way and we continued to push all the way down through this area of support where I thought we were going to get to initially. Now, why did I close once we got down here? Because we're running into an area of support where price has previously rejected, not just there, but several times over here in the past as well. So for me, I thought that I had maximized the opportunity for this trade, and as you can see, I closed the full price or the full trade at 87,560, which was just as we crossed below this low here. I closed the trade, and as you can see, boom, we ended up reverting and coming all the way back up to this top side. Now, this was not really, I wouldn't say that this was like a textbook trade when I entered. It was more of an intuitive feel. Once you've seen patterns and you've seen candles develop enough times, you kind of get a feeling for where price is going to begin stalling and reversing out at. And this just so happened to be one of those intuitive feels. However, once price broke below this support and we closed below the support, that was your indication that price is ready to trade lower. And as you can see, it traded straight down, filled all of this gap here even lower before reversing. So now, what should you do now that price has already come back below here, took the liquidity and closed bullish? In my opinion, there's nothing to do. It's 3 o'clock in the afternoon. There's nothing for you to do. There's no volume in the market. So the only time that price is going to break out of a range, whether it's higher or lower, is going to be with volume in the market. So as you can see here, what we have now is we have this range that formed. Obviously, you can see that price closed at about $88,400. We've been able to trade below here, but not close below here. So what we need to see is either two things can get you involved, whether you're going long or short. If you get a candle that closes, let me find my rectangle tool real quick. I don't know how I always lose this, but I always do. If you can get a candle to trade and close a bearish candle, go here. If you can get the candle to close below this support, bearish, then you can say, okay, we have this entire wick to fill here, right? We can fill this whole wick lower, and then we have areas of support that we can come and tap into that are going to be much lower, right? So this would be potentially a 113 pip gap fill or wick fill. That would become a wick fill. If price were to close below the support, this now becomes an opportunity to fill the wick lower and potentially come and take all of this liquidity sitting below here at around 86,500. Whether we're going to trade all the way back down into 84,000, you just don't know until price gets to here and you see how it reacts. But there's a good 113 pip range opportunity lower. Okay, now that's on the short side. At the same time, if price were to develop just like this and say we are at a range from here, and in a high volume time, you get price to close a bullish candle above this area of resistance, then you can say, okay, well, with volume, we should be able to push to the next area of resistance, which would be around $93,200, which is also a very large range of about 300 pips. That's a 300 pip range that you can get involved with, okay? So what I'm not going to do is I'm not going to be a dumbass and try and force a trade in this range right here, because as you can see, this range is just very sloppy, back and forth. It can trade anywhere. I don't want to get involved in this. This is ugly. This is sloppy. This is dog shit opportunity. This is no trade. This is a no trade zone here. In between these areas now is become a no trade zone. Okay. The only opportunities that there are going to be if you can get a candle to close above here and then break this candle's high to push you higher, or if you get a candle to close bearish below here, respect this high, break this candle's low, and continue pushing down. Okay? That's it. Those are the only ways that you're going to get involved. Don't be a dickhead and blow your account getting chopped up in between here. All right? That is all that you can do. So remember, price action is king.